to the deal desk. So every week on Thursday, 11 a.m. Central, we go over products, deals, and strategies to get what you need to succeed. This week, we're going to specialize on long-term lending, whether it's residential or commercial lending, because a lot of you guys don't understand that there is aspects of lending for commercial real estate long term, whether it's 10, 20, or even 30 years. Okay, so there's more to the long term space than DSCR. Okay, and that's what we're here to kind of tell you guys that there's other products out there waiting for you to use and strategize to grow your book, refinance your properties, or even get some cash out to buy other properties. All right, so with me, as always, is Rob Lewis over at Full Spectrum Lending. Say hi to everybody, Rob.
Hi, everybody.
Absolutely. So, Rob, let's work on the residential side first. Everybody knows about DSCR, and let's go over a little bit about the DSCR, but let's go over some of the products that people may or may not know about that can actually grow their business because they're only looking at DSCR loans. What do you got for us today?
So we're kind of slammed in all kinds of arenas. I don't know what happened this morning, but woke up to about 10 different new loans, and every one of them has a different DNA. What we definitely are seeing is a lot of cash outs for people to maximize on availabilities that are out there. So on the DSCR, normally we're coming off of a fix and flip, and somebody decides to keep it, and we're doing a DSCR. But we're seeing a lot of DSCR refinances. And the reason the DSCR is so attractive is because you're not looking at tax returns, you're not looking at W-2s, you're just looking at the rental and maybe a credit score. And the credit score might not even play a value, about if you have great loan to value, or you have a lot of equity in the property. So long term wise, we're seeing that as people maximizing, cashing out, and going and buying two, three more properties.
Absolutely. So, because one thing that you guys need to understand on DSCR, the DSCR stands for debt service coverage ratio. Okay. And what that means is that, take an example. If you had a rent for 1,200 bucks a month and your DSCR ratio needed to be 1.2, that means your mortgage couldn't be more than 1,000. So it's your rent divided by the mortgage. So as long as your rent is higher than the mortgage amount, that's your ratio. A 1,200 over 1,000 is a 1.2. 1,100 over 1,000 is a 1.1. 1,000 is a 1.0. And there's different products and different lines and different strategies for different ratios. The higher the ratio, the lower the rate because the property pays for itself. It's based on the revenue of the stability of the actual product. Rob, do I have that right?
100% right.
All right. So everybody kind of DSCR stuff.
You actually said that better than I could. That was pretty strong. Yes, you got it.
I've been around. It's all right. So what a lot of people get confused about is they think non-QM is the same thing as DSCR, and is absolutely a false statement. Rob, what is the
Correct.
difference between non-QM and DSCR?
So it's funny you said that. So non-QM is what we actually were busy with today. And you can do non-QM on a residential real estate, or you can do non-QM on a commercial real estate. And what non-QM is, rather than me looking at a tax return, or our standard documentation, a tax return, a W-2 or something, we're looking at alternative. So it could be a 12-month bank statement. It could be a 24-month bank statement. And what we do is, instead of looking at a tax return where you may have taken a loss, we're looking at a bank statement, and we're seeing your true deposits going in, money going out. Or an alternative to bank statements is, we can look at a P&L, have have a CPA do a P&L letter of, hey, this is what they make, P&L balance sheet. And we're doing a lot more of that, even in residential real estate, owner occupied. We've got four of those going as we speak. So, but it's an alternative measure of looking at income, where DSCR is straight looking at the property, the taxes, insurance, and what is your rent, with the calculations that you talked about. And if that's in line, DSCR is going off the rent, where non-QM is an alternative measure of looking at your finances and your ability to repay.
I mean, that information right there alone. for you guys that are in a property and you're like, you've been plowing through DSCR people like, oh, we do this and they promise you the world. And they're like, oh, it doesn't, you get to almost the appraisal and it doesn't paper out. You guys need to know there's more products in investment lending than what people are telling you. You just need a team that knows how to stack capital and how the products move and what deal, what product, what money actually affords you the best return. All right. So we got DSCR, we got non QM. Let's talk about the residential space. So if you got an investor, they got a property, 1 to 4 units. So that's our residential guys. So, you can have a quad and still be resi. All right. So we got the non QM and we got the DSCR. How would you guide? How would you consult? How would you go through all the products in a general sense of what these people could use so they know they have options?
Well, I mean, the key is diagnosing what I'm working with. So it's kind of like going to your doctor. You don't want your doctor to guess. So you're going to give that doctor your true symptoms, what's bothering you, and then they can assess. What is cool is in the early 2000s, we had a plethora of alternative products that were crazy, bizarre, made no sense. A lot of that is coming back in forms of where we had back in the day, we had stated has been brought back in the what we call the P&L and balance sheet loan. And that's what we seem to be busy with a lot right now. So where a lot of lenders that we've seen are having a hard time keeping their lights on, and paying their bills because rates have been 6, 7, 8 fluctuating. The alternative programs, if you know them and know how to structure, or brokers that have called in. We work with a lot of brokers, Alex. Why? Because you and I know how to structure, and we have avenues to different capital and creative capital. So we're able to do more on the alternative documenting, structuring, and finding creative ways to get you either into a home, your home, or an investor home, or a commercial product by being non-bankable creative.
Mhm. Right. So, guys, I don't want you to look at your investments, especially if you're in trouble and you're like, uh-oh, I don't have I don't have anything. I'm going to lose everything. Guys, there are so many products out there for you. Go to a team that understands capital and understands products. There is not fix and flip in DSCR. There is an array of products for you that allows you to get these things done. It's time that you had a team that understood that. Okay. So on the commercial side, a lot of people have no idea that there is investment private capital for commercial long-term lending. They feel like they got to go to the regional banks. They're at prime plus one or prime plus two on a 20-year AM on a 5-year balloon. They got to put deposits in the bank. They got to do all their tax returns. They got to make everything, just bank, bank, bank. And the funny thing is, the rates for the commercial investment loans aren't that different than the bank loans. Rob, what are my commercial guys looking at? They want to buy a property, they want to refinance a property, they want to cash out a property, they want to do something in commercial, but they don't want a short-term bridge. They don't want a mezzi loan or anything like that. What could they do in commercial long term?
So commercial long term, non-bankable, you're looking at full doc loans, light doc investor programs, no doc streamline programs, and bank statement programs. So I'm going to go off script a little bit. But if you
You have,
go to your
you have a
bank,
script?
it says to say this. No, but if you were to go to a bank right now, and being a banker for 30 something years, I can say this. I'm going to probably piss some people off. I'm going to make some people laugh. But if you go to your bank right now, you're going to have a banker. This banker has never managed a payroll. This banker has never made an investment or took the risk that our investors here today have taken. So that banker is going to take your information and they're going to take your tax returns and your P&L and balance sheet and your bank statements and your all these items, and they're going to compile it. Some guy behind the scenes is going to compile it. That's your underwriter. He's going to write up a script. He's going to write up the loan, the loan write up, and then you're going to go to loan committee. And in loan committee, you're going to be judged by 30 plus old bankers that have been in this forever, never took a risk in their life. They're going to see one thing on your P&L and balance sheet that, oh my God, I can't believe their CPA did that. and probably turn down the loan. In that time period, you've had 30 to 45 days wasted with a bank that has one product. When working with me, you, the other brokers on the call, investors are coming to us saying, "Hey, Rob, here's my deal. I show $5 on my tax returns. I'm kind of light in liquidity, but I've got this property. What can I do?" And we're going to diagnose you like a doctor, and I'm going to look at my 25,000 different programs here and see which one fits best. And the lender that you want to work with is one that tells you what you need to hear, not what you want to hear. Because that lender is telling you what you want to hear is going to very disappoint you in 30 days from now when money's being spent. So the P&L and balance sheet loan is right now popular with us because it tells a story from your CPA and it's a light underwrite, light doc. And I think the rates are subject to change without notice. I'm not quoting rates, but we've seen rates even on the deals that you and I quoted a couple of days ago, anywhere between 7, 8 to 13%, depending on your scenario. But we're seeing rates now competing with banks, and that bank may or not want to do business with you. We have people that want to do business with you. We want to
Right.
do business with you.
No, absolutely. I mean, just like you said, there is a misconception in the industry today that capital is difficult to obtain. That's not the case. There is a lot of capital out there looking to be deployed. Is the requirements, have they shifted to the market? Yes. The biggest issue I'm seeing is in venture capital and private equity, but not in the deployable of investment lending. Rob, would you agree to that?
I would say regulators in banking has become extremely more tight. You are seeing family offices, you are seeing non-bankable, non-regulated, semi-regulated lenders that are deploying more capital right now and are more accessible than your local bank.
Yeah. So guys,
If that answered your questions.
it does. All right. So what I want you guys to understand, like when I say commercial, a lot of you guys are saying, "Oh, apartments." That's not the limit of commercial investment. Okay. Hotels, um, storage units, um, anything that's not 1 to 4 single family. It's time that you guys looked at the opportunity of investment and based your investment on the return. When I'm in mergers and acquisitions and when I'm in scaling businesses, today I own and operate 5 businesses. And each business, we looked at the exit first and then work backwards. Same thing with this. We're looking for you guys on the long-term lending side on residential and commercial to look at your exit value, then let's work backwards and get you to the return you need on X amount of time. So that's what the long-term paper is for. The short-term stuff for the flipping and the value adds on commercial and the renovations on distressed and your development projects. The short-term stuff, money's going out, but it's the potential of short-term money at short-term gains and stuff like that. What I'm talking about is understanding long-term investments to get a larger return over a longer period of time. Okay. So, Rob, on the commercial loan aspect of things, is there anything that's just off the table? You're like, nah, no, no, we can't do that. Like, what is it? What, because commercial is just a different beast on the asset classes. Would you say the easiest thing to get done in today's capital market, and what's the hardest?
The hardest to get done in the misnomer, and it shows up on my my Facebooks and LinkedIn's and all that, is the guy out there offering 100% financing, 100% financing. And when you think about 100% financing, you're thinking, I'm buying a property at 250,000 and it's worth 250,000, and I need to put 100,000 in to improve it, and I'm going to get 100% financing. And you know as well as I do that if the lender is out there doing that, one, they need to be drug tested, and two, they're not going to be around long. So we're seeing a lot of individuals who will call in and say, "Hey, do you have that 100% program?" And the answer is the lender will do 100% if you have value within the property, meaning 70%. And then, we look at the after repair value. So there's an underwrite there and it's a measurement of equity
Mhm.
that, but if you're expecting to walk into a real estate deal with zero out of pocket, pay no closing costs whatsoever, that is probably a flawed strategy.
right, because
And
that
some people and people will say I'm 100% wrong on that, but shop it and tell me how it worked for you.
and to be clear, to
What we
you,
are seeing get done, what we are seeing get done, and this is a kind of a neat trick that's come back to the market, is purchasers that are finding motivated sellers that are like, man, I want to sell this property and it's been on the market for a while. We are seeing, and we have lenders that will allow a seller second.
yes,
So, and that used to be where the lender would be in 50%, first lien, and the seller would be, in a lien position. That has increased now where we have lenders that will actually go up to 70 of the first lien, allow a seller second, but they still want you to have capital in, and maybe that capital is 10%. But we are seeing a lot of that where investors are going and negotiating. They want to maximize their capital, so they don't want to put it all in one property. So they're negotiating where that seller is coming in with that seller second, and then they're able to then go buy two, three properties because they've maxed, their liquidity to be able to maximize and buy more properties.
no, absolutely.
That's a cool trick that's come back, and we are seeing a lot of that request.
And remember, we're talking about long-term financing, guys, because a lot of you guys that are purchasing long-term, purchasing, not refinancing, purchasing long-term, there is a 70 to 80% loan to value. It's very well expected in residential to come out about 20%, commercials about 20 to 30. Okay. And what Rob's talking about is a capital stack strategy. Having a second lien against that with the seller, you're still coming in maybe 10%, but you're maximizing your dollar amount on acquisitions because all of this is trying to get assets for a period of time to increase the valuation of that and either refinance or dump that portfolio for value. Okay. So these strategies on acquisition with long term is something you need to have in your pocket. Go ahead, Rob. Yeah.
No, you got me sold.
Yeah. Well, I mean, I've been around.
I was like,
So,
let's go.
so,
Yeah.
so we have opportunity for you guys. And on these calls, one of the things I always like to remind, and it's because it's about 15 minutes into the call, I always like to remind you guys this. Remember, as our ecosystem grows, and you're going to see this, and eventually these will be on YouTube and come on to lives again. Um, Network in the chats. This is not a lecture. This is you guys getting education. Eventually, we're going to open it up to Q&A. One thing I'll mention them about every 15 minutes through the call is I want you to do a favor for me and Rob. I want you to go to our Facebook pages, Instagram pages, anything like that. Like, share, comment, tell them what you learned here today. This call is not, as you noticed, a sales pitch. This is education. This is letting people know that there's people out there that actually have the knowledge to actually scale your business, whatever business that may be. And our way of doing it is to give you money to get you things to grow that. Today, we're talking about investment real estate and how to capitalize that. So if you wouldn't mind, make sure you go to our Instagram pages, our Facebook pages, you like, you share, you comment, and you make sure people know that there's people in the industry that's there to help you out. Okay, so before we start to get into question and answers, and you guys, I will pick on you to make sure you guys introduce yourself to the community. Use that chat box and make sure people know how to get you, because I guarantee you there's at least one person on this call that has something else that the other person needs. Okay. So, Rob, when we're looking at commercial investment on the long term, because that's the least known about, what are some of the different products out there that you think that people just don't know about?
Think everything we just discussed. I think when somebody thinks so, give me. I'm pulling up my pipeline right now. So if I'm going to go through the first ones. I've got a vet office here. We got two multifamilies here. I've got a 24 lot development with construction and spec housing. Um, I got a hotel. A lot of people think that, hey, I've got a vet office, or I want to buy a strip center, I've got to have tax returns that are solid. I got to have an 800 credit score, and I got to have about $2.8 billion in the bank.
Mhm.
That's flawed. So it's the alternative docs, the light doc investor programs that we are seeing that have made a hell of a comeback. And people just not knowing they're there. We're still in the mindset that I've got to put on a nice suit, go into the bank, and talk to a guy that's never bought a piece of real estate in his life. Where you and I are students of the industry, we've taken the risk. We've won, we've failed, and I've definitely learned from my failures. But we know how to direct and how to strategize. And the other aspect, I'm going to sell us for a second, but I want to sell the group. You and I are students of the industry.
Mhm.
You and I every day, as much as we know, I've got 30 years experience. Experience doesn't mean anything, but I have 30 years of learning, and I'm a student of the industry. You and I every day learn something new.
Yeah.
And I've learned things from 2-year bankers that have called me up, and I'm like, oh well, that exists. So I love calls like this because I'm a student of the industry. I want to learn. You are great at educating, but every day new things, just like AI. AI changes every second. I mean, the technology is changing every second. Lending is changing every second, and new strategies are changing. So pick up the phone, give the diagnosis, and don't hold back. If you're talking to a guy like me or somebody prettier than me, give them the full diagnosis. There are opportunities out there if the deal works. If the deal doesn't work, don't make it work. But if the opportunity works, there are lending tools out there to make it happen.
No, absolutely. And it's funny thing that you mentioned AI is that the reason why we close so much and we move so fast is that money you may or may not know this. I am co-founder and owner of 3 AI companies. So I've actually built virtual banks, virtual underwriters, virtual bankers, virtual anything that had to do with lending. So as soon as your stuff comes in, it actually gets challenged and denied by a bank, and the reason why it gets denied. Then we work with our clients to fix those denials before the bank sees them. So it's important, and maybe we'll do a call about that on a deal desk about AI in real estate because there is a lot of people out there in the industry that are talking about AI in real estate. And I look at it and I'm like, you have no idea what you're talking about. So
Yeah.
maybe we'll do a call like that. If you guys, what do you guys think in the crowd? Would you guys value a deal desk about AI in real estate? And because I'll tell you this, I'm building an EMR. I own an implementation company, and I and on the development team on a business AI, and I build banks and I build underwriters. And I'll tell you this, Rob, tell me if this has happened even this week. We've seen this deal, but because of the way you packaged it, we'll work with you.
Ironically, yes.
We've actually
So it's
because
it's cool. No, it's cool, and it does stroke the ego. So if we come across arrogant and confident, it's just because we're very handsome men. But no, no, we've had that, and it does stroke the ego in that, hey man, it's funny. I've seen this, and we actually denied it, but your write up is amazing. So when a deal comes in, we run it through an MRI and CAT scan.
yeah,
We look at the flaws, we look at the pros, and we write it up like that credit analyst at the bank would, but we write it up in a way that a lender wants to see it. We point out the pros, point out the cons, but they have an instant loan committee the second that they get a loan from us. So I think what are we shooting for this week? Is it 2 or 3 that we've submitted that they've seen already,
yeah,
but have decided to work with us because one, they like us, know us, but like the deal and understood it.
yeah.
And I think quote unquote, my one banker over here, I saw it, but I didn't get it. I kind of get it now. I'm like, oh, cool. So
That's a
so
great,
and how many times have we gotten a deal submitted where it looks like this? Hey, here's my loan.
hey,
Um,
great
so
point.
so that is a game changer in loan submission and ability to move, speed to money. And it does set us apart from our competition.
Well, that's a great point because last week we went over foreclosure bailout loans, which people didn't even know existed. Today we're looking at long-term residential and long-term commercial loans. On the initial submission and through the process, let's go over a good baseline because you hit the nail on the head in investment lending. It's about the paperwork and the story. The lender just wants to make sure they're going to get paid back. Just because you listen, let's break the suspense here. Most of the deals we look at have hair on it. We just know how to comb the hair. So we want to make sure we have all the hair and mess it up so we can comb it. So tell Rob on these specific deals, let's go Resi first. What is a good stack that somebody should have when they want to know yes or no and how much on a residential long-term loan? What should they have prepared for us? For anybody,
Well, I mean, basic, residential homestead loan.
not
That
homestead.
is
Let's stick with
a
the investment.
investments. It's going to be based off property. So if I've got a property keyed in, I'm going to have my information on the property. If there's a lease in place already, I'm going to want to know what that lease is. Taxes and insurance, we can get that figured out. But resi investor is the easy one. It's what are you going to lease it for? What do you think it's worth? What can you buy it for? I mean,
Now,
that's the slam dunk easy one.
and then so and what I want you guys to do, and I do this with all my clients. I want you to put a little folder on your computer, okay? And I want you to put a copy of your ID in there. I want you to have a space for the last 2 or 3 months bank statements, okay? And if you guys have a personal financial statement signed right there, let it go. Your LLC docs ready to go. Okay, everything that you would need for any loan. Okay, you have it ready to go. So when you want to submit and you submit a file, you have everything that you would need that the lender would want. Remember, our job is to paint the picture, okay, for the capital. So the more information you give us, the better off. If you're refinancing property, give us the paperwork from your last loan. When did you buy the property? How much did you buy the property for? What repairs did you do to the property? Is it rented? Where's the lease agreement? If you have commercial, do you have a rent schedule? Do you have
REO. Yeah.
yeah, the REO. So all those things in a file. And the reason why I'm telling you guys to do that today, even if you're not looking for long-term capital today, even if you're into short-term capital, if you have your operations in place like that, you guys know how hard it is to find a property that you want today. You got nothing, you got nothing, you got nothing, you got 10 properties to look at. So when you have those operations in place on your computer, you can start plowing through documents really quickly to get easy yeses or nos. Okay. On commercial, is there anything I missed that they should probably have in their stack ready to go today?
The the one that I'm definitely seeing is and you hit on it, is the personal financial statement. So if you are looking at commercial, even on a light dock, the personal financial statement is kind of like a residential 1003. It tells me everything about you. But what the flaw I see in personal financial statements is, we'll see light liquidity and we'll call up and go, "Hey, I see you've got 100,000 here. When we talked on the phone, you mentioned you had 1 million, and oh yeah, but I didn't want to show that." The personal financial statement, for some reason, is a misnomer that people think that the second we get it, we're launching it to the IRS and we're telling on you. The personal financial statement is our roadmap to say, okay, what do you have to work with to make this opportunity feasible? So on the personal financial statement, fully completed. I mean, I've got a guy that's solid, worth several million, turned in his personal financial statement yesterday, and it had his name, his address, and phone number. There's about 6 more pages there that didn't get touched. So, take your time to go ahead and have that completed, have that updated, and be ready to provide that with the lender.
Right, guys. And the reason why we're telling you guys, and the reason why we have this show, and the reason why we talk about all these products is because everything moves at this lightning pace. It's like investment in real estate is a hurry up and wait game. Okay. Our job is to really make sure it's seamless. You need to know about these things because nothing's more frustrating than when you're trying to get money and a guy like me or Rob's like, well, you have your personal financial statement? Like, no, I've never made one. Well, that's an arduous task if you never went through a personal financial. What's a liability? Do I do I add my motorcycle? It's like just put it in there. So
Yes.
yes. So
Damn it,
so
yes.
so I want you guys to know these things. I want you to utilize us not just for capital but for strategy. Our job as your people, even just on this show, is to tell you what to do to be successful There's a multitude of products. It's our job to look at you and say, you know what? Do you have a time issue or a money issue? Well, I need to close in 2 weeks. Here's your product. Okay, this is what I need. I have a money issue. I need it to be cheapest. Okay, well, it's going to take this amount of time. Here's what you need. Our job is for you astute people that actually are taking the time out of your day to get educated. Now you know how to run operations. You run a business. You have to have operations. Our job is to capitalize your operations. Okay, so those are the things you need to do today. Put them in a folder, have them ready to go because you're like, I'm not really buying anything today. And you're going to go drive down. I see most of you guys are in Houston. I see a Florida person in there. You're going to drive down the street and say, ooh, what's that? And then you got to move. Okay. So it's 30 minutes in the call. I'm going to do my little spiel again for some of the people come on. I really want you guys to do me a favor and Rob a favor. I want you to go to Full Spectrum Lending Facebook and Instagram pages. I want you to go to Alex Buriak officials on my Facebook and Instagram. I want you to like, comment, and share. Tell people what you learned. Let us grow this education community and this networking community so you guys can get more deals done and actually get a team behind you that is looking to grow your business. Okay. So at the 30-minute at the top of the hour, before I go to Q&A, Rob, is there anything we missed on long-term residential or short-term, whether they're purchasing, refinancing, or cashing out?
No, I just say if we do have investors on the call and you are looking for a deal, let's talk about it at the end, end of this or call us up. But I want you working the phones and going and finding deals. I want you, finding that guy that wants to do a seller second and maximize your cash flow. Because I guarantee a lot of we get asked all the time about seller seconds, but people don't know that it is achievable and there's lenders out there doing it. So, and I like your idea of having your stuff ready.
That would be
Have it
nice.
ready to go because, yeah, yeah, stuff. But and if you're a true investor and you're out there hunting, I mean, how many times have you not been looking and you found an opportunity? And then you're working your phone trying to find a bank or a lender, because they want to close in 2 weeks. So just have your stuff ready. But I'm hoping that we've talked enough to get you motivated to start working the phones, work deals, find a motivated seller, and let's see if we can work you into some pretty cool opportunities.
Absolutely. You'll notice the Full Spectrum Lending website and phone number in the chat. AlexBuriak.com and IronRockConsulting.com are my sites. You'll notice there's a lending AI mergers and acquisitions. That's why I put both in there just in case what you're looking for and if you just need help. Okay, so it is just past 30 minutes past the hour. We went through all the product stuff like that. Now, what I want to do is there has to be, and let me preface this, guys. And I know this is a cliche. There is no such thing as a novice answer or novice question, a stupid question, or anything like that. If you have the question, everybody else does too. Okay, so what do you guys need to talk about either in residential, long term, or short term, or even other product matrices that we can help you with today? How to scale your business, what's going on in the market. Maybe you have something to offer the team. What is it? This is the time to start interacting with the group, asking questions, making comments, and seeing what we can do for you guys. It always takes that first person to do it, and the floor opens up. So, who's going to be the brave one? Come on.
Hey Alex, I'll go first.
Okay.
And I know you guys are talking a lot about investment real estate and commercials, and I just want to clarify the commercials. Can that be a purchase of a business? Currently, I'm looking at buying a business, and I'm running through, it's got to be through SBA. Just wondering if y'all have any programs or tools for purchasing a business. The business has been running for 10 to 20 years.
Is a business real estate or is it equipment fixtures?
It's a probably a services company or like a manufacturing company. Some that I run through do have real estate involved, and I've noticed I went through some LOIs already where if it does have real estate involved, the amortization is longer. If
Right.
it's just the business, it's like a 10 year.
Yep.
Some of the areas that with SBA, when you do like a seller standby note, it's for the you they don't it's for the term of the note, meaning like it doesn't start until after, and that's really turned off some of the sellers.
Yep.
Um,
And a lot of people don't know that. That's cool that you brought that up because, and I've even been in loan committees where loan officers got it wrong. But yeah, that seller second, the SBA wants to be paid off first before the seller gets paid off. So that has to be, throughout the extension of the loan. So you're 100% right. That's good intel.
so just curious if y'all had anything out there that there's also other parameters that an SBA they put a lot of regulations around that on what businesses that you can buy and they don't some that they don't finance.
Yeah, I found out some of those the hard way. So yeah, so the cool news is I built 4 SBA departments, got them PLP approved with banks, and know SBA very, very well. And to answer your question, there are alternatives, and they mirror kind of a non-SBA. We call it an SBA fallout, but it's not. It just mirrors an SBA with some flexibilities. And then you also have, let's say it's a franchise. If it's a franchise, there are franchise loans and franchise opportunity loans out there. And if it's just a business per se, there are business loans out there, but they are going to mirror the SBA structure with some stretch in the guidelines. And I'll go ahead and say it. For example, there's certain restaurants that SBA won't touch. Hooters is one, and but that style of a restaurant is not. You can't do it. There's certain other things that you can't do where the business loan has flexibilities in that, but it's going to mirror the structure and may be priced a little depending on the scenario too. It can be priced better than SBA, but maybe go the other direction and be priced a little higher depending on your value of FF&E and what the business is valuing at.
Yeah, I'll go ahead and be non-politically correct here, but one of the
You could
companies.
tell I was skipping around it, so yeah, you do it, my friend.
Yeah, so
I was like a pastor at Hooters. Yeah, go ahead.
well, so Hooters, yeah, and I was also very excited about a company. It was a firearm shooting center, gun range that I was very excited about. It's something I have a passion for, and they just simply won't finance anything gun
So,
related.
so
So
I want to pause you on that note. This is good. So I have financed 3 firearms, one in Katy, if you're in Texas or if you're in Houston, the
Houston,
area.
yes, Houston.
But I financed a large one in Katy with a 504 loan. So the misnomer is a perfect example. I got to be careful with saying banks because I don't feel like being in court next week. But a certain banker made the comment, SBA will not allow it. So what you have to understand is SBA has a plethora of guidelines out there, but that lender is going to layer it. So when a bank is a preferred lender, they are underwriting with a blessing from SBA to underwrite that file, yet they will put their own banking layers on it and their own rules. So this particular bank have told multiple clients that I got to work with that SBA doesn't do franchise loans. SBA doesn't do this type of deal. And the reality is SBA will do it, but you got to find a bank that doesn't have that layer that is willing to do it. So I have financed 3 firearm places with SBA, but there are also alternative business loans, and they're the American Pride group that will definitely look at those. It's got to
Okay.
underwrite. It's got to underwrite, but there are opportunities to get that done.
No, it sounds good, Rob. I think you and I can probably just take this offline and go through the details.
Yeah, definitely.
I appreciate it. Thank you, Alex, too.
No worries. Lyndon's good people, Rob. Okay. So don't yell at them.
Let me pray about it at Hooters.
All right. Peggy, you got a question for me?
Yes, I do. Thank you so much for calling on me. I wanted to, I guess, along those same lines. So in my situation, I was having, trying to find ways to help the smaller land business owners that are landlords to do like small, like maybe 2 to 10 properties, right, that they have in their portfolio, refinance that at a longer term because they've had private lending. I actually fall in one of those categories as well, with smaller portfolio and seeing what options are out there. SBA is always like, oh yeah, we don't fund things with real estate or something. I don't know what other options besides, I guess, the private lending option through SBA to do portfolios that are rental units. Now, in some cases, I've got some owners that have brick and mortar, right? But then others have mobile homes, but they own land on the mobile home and the mobile home itself. So not parks, just to make it that clear. So I don't know what options are out there for those type of things. I've been looking not just for myself, but for others in the industry of mobile homes that they own, whether they're duplexes or they're single family mobile homes with land that are great houses. Actually, if they wanted to, we could convert those into like brick and mortar homes, or they could, but we haven't done it. So just kind of like seeing what options are in those markets.
Okay, Peggy, all of that is really, really good, and you threw a lot out, so my ADD captured it, and I'm going to bullet point it. Okay, so I'm going to try to capture them all.
Okay.
One is no, SBA definitely does do real estate, but where the flawed spectrum of SBA is looked at is SBA will. Some banks will say SBA does not do RV parks. Okay, that's true and false. SBA does short term. So a hotel, SBA will do. An apartment, SBA will not do. An RV park that is weekly, rental, or an RV park that acts like a hotel with a short term stay, SBA will do. Long term living with year leases, 2 year leases, SBA will not do. Um, does that make sense so far?
Yes, that does. And
Okay.
mobile homes. What about though with the single family mobile homes that are not in parks?
So there are opportunities for those. They can be treated like a DSCR depending on the package. I have one in Florida that we're doing right now, and it's a little different, but it's 10 mobile homes. They are fixed within the ground. They are permitted, and
Correct.
we have all of their VIN numbers and all that fun stuff. We were able to. It got turned down around the nation. Thank God. Come to me. We were able to place it with a lender that looked at it from a DSCR perspective and approved it. So sometimes it's maybe we need to do some things, or maybe some money needs to be invested where it gets underwritten allowed or underwritten pretty. And and again, another most misnomer, and I know my ADD is kicking. I'm just trying to stay focused, but a misnomer is nobody touches mobile homes. That's true and false. If the mobile home is 50 years old and falling apart and not and not fixed, it's probably not going to get looked at. It's going to get looked at as land only. But if you have a mobile home park that is that is cash flowing, that and certain things have been created and done, then yeah, we can look at it DSCR all day long. And then the other thing that we are, busy doing too is we have a lot of clients that are on these bridge notes, bridge loans, hard money loans, and it's time for them to come off of them. And so all these, alternative programs that we talked about today, we are doing a lot of refinances, getting people on long terms. And a lot of it is because the market was they bought it thinking they were going to flip it. And right now the market's a little soft and rental is a little bit more hot than somebody wanting to pay a 7-8% rate on a $400,000-$500,000 home. So we are doing a lot of refinancing, putting people into longer, permanent, better rate opportunities, and then they're holding the property until rates come back or market comes back, and we get back into that seller market.
One of the things I want to add
Did I address all that, Peggy? Because I know my ADD went all over the board.
Yes, to start, that's great. There's also some conversations I have, other investors that are asking, okay, if I refinance a rental that has lots of equity, then pull that out, is it best to just pay those mobile homes and get rid of that? And it's, again, it's going back to the math and seeing what makes sense. But that's kind of where I like to give options, especially when we meet we have a monthly meetups with our financial friends, I would say, that I host every month. And so
No, it's
a
cool,
lot of
Peggy.
yeah, I
Yeah.
think so. A lot of conversations come about how could we do creative finance that's going to be long term, that's going to be effective for those folks that are going from, owning these single family portfolios to then to the multifamily and growing into that.
So that is going to truly come behind the need behind the need. So where I don't want to commit lender malpractice is I can give a vague explanation saying, hey, here's what I think, but unless I know their true need behind the need.
Correct. Yeah.
So definitely if you and I and Alex want to have one-on-ones with these individuals and learn their need, then we can come in with a true diagnosis to treat that symptom.
Okay.
But just from the vague glance of what you said, yes, smart, and it's being done every day.
Right. And
Okay.
just to kind of add into the mobile home aspect of things. So I want to make sure we differentiate terminology. I want to keep single family and mobile home separate. Even though they're single families, the asset is going to be different and viewed in the lending space. All right. So if they want, like you said, they may be able to cash out single family residences and kind of pay off the mobile home notes. That could be one play. And the reason why I want to look at both and with Rob is because sometimes on the mobile home lending aspect, it's going to be based off how much like Rob's saying, we're trying to do a lot of refinances from hard money lenders. Well, how they valued that property may dictate a different value on how they try to assess it and then how it's appraised today. So a lot of those people are maybe coming out of pocket at closing, depending on the valuation, because the loan to value on mobile homes can be lowered due to the asset class. So it may benefit them to capitalize other assets and pay that off, depending on how that strategy needs to work. So we want to look at like the whole collateral pool of what they're working with so we can strategize the best return on the capital stack. Because that mobile home asset's not because we talked about mobile home parks. Mobile home parks is different than a mobile home on acreage. Okay. And that's going to be viewed differently. So we want to
Well,
see.
you have tenant owned and parked
Yeah,
owned, and that's where you're going with this, Alex.
right,
The underwrite's going to be different. You're right.
right.
Correct. Okay.
So park owned it's going to be viewed a little bit more favorably. Single mobile home that is tied as real property to the land is going to be valued at a higher risk asset class because that asset is not going to be viewed as an appreciating asset. It's a depreciating asset due to the structure.
Depreciated.
Okay. So we want to look at to be able to strategize with the entire portfolio pool to make sure that borrower actually gets the right capital stack to make a profit and lower their out-of-pocket costs at closing to maximize their at least 12-month return. Does that make sense?
Yes, that makes complete sense, of
Okay.
course.
Okay.
And just to follow up, Alex, on your comments with AI, yesterday we just did a class at UCF Incubator we have here in the county, and we spoke a lot to the business owners there with the businesses that they're creating. And I think AI is such a huge factor that we've got to factor it into everything, like you were saying. I
Mhm.
think in the real estate market, an opportunity of addressing, hey, this is everything we need. We put it in a system, kind of what you have already set in place, and then telling that system then spitting out, look at this is the most beautiful way we could set it up in order for them to get the financing. I think that's a genius. That is definitely needed. I think for the groups that I meet with and the groups I see in real estate, that's great. And then also the groups that are looking at small business startups and businesses that perhaps are from a year to 3 years in, because that would then allow them to find all the financing they need if they're right? If their haircut looks great and their hair looks awesome and they have everything that they need to present to a bank and stuff, to have all that information in there. But I would like to see how could we make it very simple and simplified to ask the business owners, because again, we're dealing with like I've seen it, I do it myself. My dad's the same. And when sometimes we don't have all the information correct, like you're supposed to have. And so, how is it simplified to say, give us this so we could then spit out some awesome information through the AI programs and platforms that are available to get the best chances ever for financing?
No, absolutely. I'll give you guys a little interlude. Possibly, I'll talk with Rod to see what our next week's show will be. Maybe it will be on AI and real estate. Maybe I'll and then every fourth Saturday of the month, I have a call called Ask Alex Anything, and I just dive into people's business questions and how to grow their businesses. But to get you on with that, here's the difference between me and the people that you're probably dealing with. I actually create for governments, private sector, banks, um, high wealthy like CIOs, CEOs, things like that. They're personal agents and stuff like that. So I don't want you guys to think that AI is chat and Claude and Grok and Gemini. Those are LLMs and that's AI. Okay. What Peggy's talking about is what's called agentics. Okay. And agentics is not AI, it uses AI. So what we do is we build out systems for those people exactly the way their business runs. And it is, if I'll give you this, if you can imagine it on this plane of existence, we can build it. So when you're talking about permanent offices and real estates and industries, lenders, REITs, private equity, venture capital, all that stuff, we build that stuff out for them to make it move faster. For everybody on the call, I need you guys to understand this. I don't care how you feel about AI and agentics personally, but you need to know how to use it. Okay. You have probably about 12 more months. Okay. Before every other one of your competitors is going to be heavily using AI and they're going to be faster and more efficient than you. There's the term AI, artificial intelligence. There's nothing artificial about that intelligence. It's everything that we already know. Okay. You just have immediate access to everything we already know. All right. So you utilize that knowledge at an instant to become faster, more productive, and more efficient than everybody else. So maybe it's something we can discuss and talk to people. But Peggy, I can work with you guys just like we'd work with governments and things like that, and really make something that makes sense to scale inventory and scale revenue and make things a lot easier. Rob and I use it all the time. And that's why, Peggy, you've sent things over to me. And that's why not maybe 15, 20 minutes later, you get a full OM, a full readout, a full data room,
Right.
because we
And it's
know,
great.
yeah, because we know the knowledge. We know how to use it. And I think it's an important aspect of growing your businesses that you guys may need to know about it. So yeah, definitely, Peggy. And you have my cell. We talk offline and stuff like that too. So
Thank you.
you're welcome. So we got about 6 more minutes. Um, does anybody else have any questions, concerns, even something that has nothing to do with lending, but maybe about your business? Because I guarantee you, Rob and I have been around so long, we know how to capitalize you, we know how to stack you, and we know how to get things done. Anybody else have anything else for the call that you guys need? Beautiful. You guys already know everything. All right. So what I want you guys to do,
Teach me something.
oh God, I got Alex. Alex, you only show yourself
Alex,
because
What's
you want
going
to be
on, gentlemen?
beautiful.
Can y'all guys see me?
I can. What are you up to? What do you need?
Okay, awesome, awesome. No, just a couple quick questions, man. Love the call. Congratulations on the new endeavor and everything that you're doing, brother.
Thanks, man.
And dude, I was just like at shock that you didn't have the handlebars going. I'm like, what the hell happened? Where they at?
I shaved it.
Yeah. It was just I had that mustache for almost 10 years. I just like I wanted something different, so I just got rid of it.
That's pretty cool. You had it since you were 10 years old. That was pretty
Yeah,
cool.
I know, man.
Okay, so couple questions. One is, and I'm going to allude to one of the other speakers that were talking. They were asking,
doing the individual versus, let's just say I got uh 20 properties or
Okay.
15, whatever, and they're all single family, different locations. To do a DSCR, could you do a package deal, or do they got to be individualized?
I have 5 lines that will do a portfolio. We create a portfolio.
Now,
Okay.
let me be clear on the portfolio too for Rob. How far away are these properties? Are they all in different states?
No, they're all local.
They're all local. Okay, that's
Yeah.
yeah.
And it with that, if they are in multiple states, then what were you gonna elaborate on that?
Yeah,
Well,
Alex.
well, no, because I was looking like I've seen some lines where if they're like in one's two are in Washington, one's in like North Carolina, I've seen some not difficulty, but Rob, have you seen difficulty in multiple state acquisition or refinance on portfolio when they're in all different jurisdictions and things like that?
So you and I had one that was 40 properties,
Yeah,
and we actually were able to get terms, and then the guy disappeared. An alien took him. I don't know what happened, but
right.
we were able to get terms, and that thing was shopped for a year. So the answer to the question is it is possible and doable. It's going to come with some restrictions. It's going to come with release provisions. You are going to be looking at, and probably an extensive appraisal, fee per property, and then if it's
Right.
multiple locations, that gets a little bit more interesting with the AMC. But it is to answer your question. Yes, it's doable.
Yeah,
Okay. I'm looking at other states as well. So, um, other states that are landlord friendly, that kind of thing. Um, Section 8, going through COVID was not as brutal for me, but I know with some other people, I was lucky to a degree with a couple of properties that were only the only headaches. But I'm looking at other states such as Florida and stuff like that. I want to be able to expand into places that I'd like to travel, with the exception of couple of states that I can buy them dirt cheap and cash flow pretty good. So I'm just looking at it. This is an option that I'm looking to pivot in this second half of this year. The second question I have is credit minimum. What's your credit minimum for a DSCR?
That's going to vary on loan to value. So we have 2 products called I didn't name it. It's called Quickie 50, but it just means it's a fast loan. But at 50%
Oh,
loan to value, no credit score, you can go down to a 480. As you start going to higher loan to values, your 620, 640, and then
okay.
as you start going a little bit higher, 680 and above, puts you at the higher end spectrums of 75 to 80%.
Okay. So minimum
And then,
for
and then,
the
and then the other, and when we're talking credit score too, credit score is going to dictate, rate. It's going to play a factor in pricing. Um,
right. And
so
so your for DSCR, your highest would be what, 80%, you said?
80, but I do have one line that is going up to 85, but you're 700 north of credit score and a debt service measurement of
Okay.
150.
Okay. I think this is going to be a one-off that I'll have to ask you, because this is going to be, I'm looking at one of the strategies. One of the things that I did a lot of notes, did a lot of owner finance. And then I back before the laws changed, I would do a lot of owner financing with the balloon.
Right.
So now I want to be able to, see an option there to provide for somebody that they could sit there and do a DSCR loan. I'm doing the owner financing, it's short term, and then they can cash me out if that's the case. That way they get a new loan and go from there, depending on what that structure looks like. Does taxes and insurance and or included on the HOA, included in the DSCR formula that you were talking about earlier?
yeah.
Yeah.
Principal, interest, taxes, insurance, and association dues. The association dues are always what kills condos. Okay,
Yeah,
but
yeah, that's why I don't do those.
but so
Yeah.
it's the full mortgage. So that's going to be the
Yeah.
ratio.
Okay, okay, I wasn't sure if the HOA was included as well, but yeah, I know
Yeah,
that's
HOA is looked at. Yes, sir.
in regarding commercial. Um, seasoning. Seasoning. Let's see here. Okay. Seasoning. If I buy a property or commercial piece of property, multifamily or commercial, whatever, several million, whatever it's going to be, and I do owner financing for short term, so that way I can invest some money for the fix up and that kind of thing. And I want to do a cash out refi. I've brought in value, it's making a lot more money, whatever the case is. Is there a seasoning minimum required if I do that to do a DSCR, to do a cash out refi on something like that?
Yes and no. I have two lines that will look at non-seasoning, but the extensive value increase had to have been done.
Yeah,
So, and then normally, our basic norm is 6 months. But yeah, there are non-seasoning options if true value has been added. If you bought it for $5, gave it a new front door, that's a totally that's not going to happen. But if you bought it
right.
for $5 and you put enough work in it and now it's worth $100, then there's an opportunity for that. Did
What
I
if
lose
there
you?
was nothing necessarily? No, I'm kind of thinking of structure on the P&L to sit there and say, because you could sit there and change up, remove the dead weight, so to speak, eliminate a lot of the BS expenses, if you will, and would sit there and float that thing up to the top pretty fast, depending on what those expenses are, right? And that amount, but that could literally make a big difference in a property if somebody's not doing the property management properly on their expenses, and they're wasting money or they're burning it through a bad contractor or something. I don't know, but so I'm looking at it from both perspectives as far as picking something up, and it already got the value based on just raising the rent, as an example.
So I would have to look at that from a one-off to see exactly what that particular scenario looks like, and then throw it
Okay,
into Matrix and see if it fits.
sounds good.
Because what I don't want to do is be vague and tell you to go do something, and then again,
Right,
lender malpractice, you hate me.
right,
So
right.
yeah. But that to answer, it sounds doable. But let's look at the particular scenario and then throw it into the index and see if it works.
I'll look at it from a 6 month perspective. But anything before that, I'll look at it, and then of course I can send it to you guys.
Yeah.
Go from there. See if it's an
Yeah,
option.
yeah. And if you have my cell phone, you can feel free to text me, call me. I'm happy to be a mental partner for you and help you out with it.
I appreciate it, buddy.
I
Thanks,
have a
guys.
very understanding wife that understands that 7 o'clock at night I might have to take that phone or text.
I don't. I turn my phone off. I got my daughters bothering me, so they take up my time.
Unless it's Alex and I send it to voicemail.
True. All right. Um, awesome, Alex. You got anything else for us today before we end the call?
No, sir. No, thank you very much. I appreciate it.
I appreciate you. Now, guys, every Thursday now, I may talk to Rob. We may bump this to noon, but we haven't decided that yet. But every Thursday, we are on the deal desk. We are talking different products, different ways to capital stack, and different ways to grow your business. We appreciate everybody coming on the call. I want you guys to do one more favor for me. I want you to go to Full Spectrum Lending. I want you to go to all the Instagram pages and Facebook sites. Go to my pages as well. Give a like, a shout out, a comment, and follow for more things that are coming down the pipe so we can help grow your business, get you the money you need, and actually get you the strategy to make some more money than you think you could. Rob, do you have anything else to add?
No, this was good. I think I actually learned something today. I
Awesome.
appreciate everybody joining, and those were some great questions. So happy to help y'all. Peggy, it
Guys,
sounds like you got some good stuff. So definitely look forward to talking to you in the future.
guys, if you know anybody that needs help, send them our way on this show. Let us get some people the real knowledge and the real strategies they need. That's real with a real group that wants to grow your business. Guys, I thank you for coming on today, and we'll see you next week. Okay?
Have a
Thanks,
great one.
guys.
Take care.